Good evening. This is Tom Alexander. It is Wednesday, July 16th. This is a special stock market update based on price action for the last 2 days. We had a pretty crazy day on Tuesday. We had a at least as crazy a day today. Yesterday was an initial signal that a top of some relative importance could have been put in place. However, today we formed very strong buying tails, a strong rejection of downside levels. That's basically what that means in the NDX and the SPX. So does this mean the bearish case is off the table? Does it mean the bull case is reinstated and we're off to the races? I don't know. I'm not sure. So we're going to take a look at both cases today and present evidence for both sides. Okay, so let's take a look at the charts here. Okay. By the way, do me a huge favor. If you have not subscribed to the channel, please subscribe to the channel, like the video. It's very helpful for the algorithms. Thank you. Okay, let's take a look let's just run through all of these, okay, just real quickly, and then I'll come back. This is really cool stuff, not only from just the idea that something big could be happening here, but it's a great lesson in price action, and specifically price action through the lens of the auction market process of development. Okay, so the SPX, it's really strong rejection of this level here. Now, I posted, I think it was yesterday, in the special report I did, how critical that level was, and that if we got below it, you actually could see acceleration. Well, we did for about an hour. And then look where this thing stopped. It stopped right at the next level down. It's just uncanny how this market is so incredibly bid, so incredibly resilient. Nothing has been able to phase this market. Now, that said, the market has sort of painted itself into a corner. If today's action reinstates the bull case, then we really should not see much more than, say, 50% of today's cash range retraced. And that should be about it. And then we go ripping higher, the new highs. That's the SPX. Now let's take a look at the NDX. And something that's interesting about the NDX, in the past 11 days, 11 trading days, the NDX has closed within a 1.18% range. So just a little bit more than 1% has contained the range of the past 11 trading days. Now, I want to show you another perspective here that I think is pretty cool. This is just a line chart, and a line chart just connects the closes. So if we take this off, you can see how tightly what this basically does, it eliminates the noise. And so the NDX has been in this range for the past 11 trading days. This is a form of balance. This is suggestive, this particular market condition. It's a consolidation. It's balance in auction market terms, and it implies an impending very sharp move. So, and once again, I'm going to go back to a bar chart. Once again, look where this thing stopped today. It stopped right here. I mean, look at all the closes and levels right in this area. We came down and traded almost to the tick. This is such a critical level. Bungee jump back off of it. Okay, let's say it's bullish. If it's bullish, then tomorrow should be another up day. We should not retrace much into today's cash session range, much being 50%. If we start getting below about a 50% retracement in today's range, something could be awry in a bullish case. If we take out today's lows now in the SPX and NDX, I would be surprised if we did not accelerate lower. Something else to keep in mind here, the indices, none of the other indices, all the other indices are lagging to one degree or another. This is the Dow, it never came close to taking out its high. Now they all reversed today, but they have not, if you can visualize a profile of the Dow, it's still below what would be its high volume node, which would be probably right about here. And if we go to the New York Composite, similar scenario. If we were looking at a profile chart, its high volume node for this structure would be about here. Equal weight S&P. Let's see, the Russell, of course, lagging as usual. So, and one last thing I'll show you, okay? And I talk about this. This is one of my favorite charts. I always have this chart up, and it's a cash chart of the S&P SPX with breadth underneath. And the signature, the price breadth signature has been bullish, meaning, to keep it simple, every time breadth has contracted down to this level, it's marked a short-term low. No different here. Now, we spiked lower, but immediately bungee jumped back up, which created this divergence. So the price breadth signature so far remains bullish. So there you have the bullish case and the bearish case. And to sum it up, to keep it really, really simple, if this is bullish, if today's price action was indeed bullish, as it looks to be, then the retracements against today's range to the downside should not exceed much more, if any, below 50%. And if that starts to happen, then you could see accelerated selling lower. You guys have a great evening. I'll speak with you again soon. And again, please subscribe. Please like the vid. Talk to you soon.